You guys know me. I've been here already in the Radical Marketer for about a year. Now I'm one of the ambassadors. And what I do is I work basically getting people approved. So kind of in the funding business, but not that kind of funding business. So that's why I know a lot about credit as well. So tonight what we're going to talk about is credit secrets and credit mistakes. Okay. The presentation, basically what we're going to go over is what is credit, credit score versus credit report, how to determine credit and gold. How do I know if I'll get approved? Know your bank rules, how to season a bank account, ChexSystems, ADP, and Plus D, double dipping, credit card referral programs, how to high utilization, chase denials, and how to undo a late payment, bank bonuses, explanation, and how to hack the algorithm. So basically, I wanted to give you guys a little bit of everything, go over every little topic, and then you guys can kind of, do your own homework if that's something that interests you guys. Okay, so let's get to it. So what is credit and why is it important? So this question, basically for everybody, it's something different. Credit definitely is a very important thing. Like if I didn't have credit, I wouldn't own a house. I couldn't go on vacation, and a lot of times I haven't even, been able to buy groceries, to be honest, if I didn't have a credit card, because we've all gone through, difficult times, I'm sure. So what is credit? Credit is the ability to borrow something. It's usually money with the understanding that you will eventually pay it back and borrow amount. The credit is your credibility. Without credibility, borrow becomes very difficult and expensive. So basically, if you're not fundable, or if they don't think that you're somebody that they can trust, they might still extend some money to you, but definitely you're going to be paying high interest. So you always want to look good on paper, as if you can. I know sometimes we get into, hardship, and, we've all been there. Like I said, sometimes I still need my credit card to buy groceries. But if you can, always try to look good on paper, because it's going to get you a long way.
Well said, Jack.
Thank you. So credit can help you save money on things. So basically, if you don't have credit, you're definitely going to pay more on car insurance. You're going to pay more on home insurance. You're going to pay more on your utilities, on phone service, on your rent, life insurance, personal loans, and so much more. So a lot of times you don't realize, but if you guys check your LexisNexis, you can see that it's reporting what you're not going to find in the regular CRAs. You can see that it's reporting things with the car. Let's say if you have bad credit, and all that is going to affect you. Also, nowadays, a lot of people think that, they apply for car insurance and they're going to like freeze their credit. It's not going to work. You're not going to get the car insurance, guys. So try, if you can, like I say, to set up yourself in a way that it's going to be a win-win and it's going to get you far in life. Remember, you always pay more for these things without credit, and that's 100%. So let's go to the next one. Credit score versus credit report. And a lot of people, even though they're in the credit space, they don't understand how this works. And there is a difference. Okay. So the credit score basically is the grade. It's like if you're in school and, they grade you. So it's, A through F. It's really important. Unfortunately, in real life, I have an A in credit, but in school, I definitely had a D or an F. And credit report is your transcripts. So it's basically not only the grade, but it's all the reports that come with it. And that's how you have to look at credit. You have to understand that right now it's not only the score, but it's the whole profile. And if you're trying to get like a personal loan or any of the loans, sometimes they go in and they do like a full report of your credit. And you used to get away with paying, let's say if you were maxed out, you used to get away with paying for it 30 days prior. But now when the FICO 10 comes out, which is T trending, they basically can see, I think it's 12 months prior of everything that you've done. So if your credit has been like this, because you're constantly maxing out those credit cards, it doesn't matter. They can see it. So try to think of your credit as that report, like if you're trying to get into Harvard and they're requesting the transcripts, and you have to look really good on paper, because if not, you're not going to get in. And that's the same thing how you need to be thinking of credit now. Credit is definitely changing. And like Brad said, before, we don't know if we're going to have it in the future. A lot of the credit cards, the banks, the institutions, they're upside down. And yeah, you might say that, the United States keeps providing money or making money, and that could be true, but it's going to get very difficult. So if you guys want to keep playing the credit card game and the funding game, like I do too, you got to think of those papers as transcripts. You got to think of your profile as transcripts. What do you think, JP?
Yeah, no, I think that's spot on. There's a couple things I caught there that I think we should expand on. So the whole FICO 10 and the T trending, or whatever it's called, that's very interesting to me. I'm not too aware of what's going on with that. So basically what you're saying, and I'm just going to throw a scenario out there. Let's say if I have a bunch of personal credit cards and I went through utilization hell, right? I carried balances on my credit card for, let's say, 10 months, and I was only doing the minimum payments, but the balances are still high. Even though my payment history might be fine, you're saying that with the new FICO 10 model or whatever, I might actually be impacted negatively because I've been carrying balances too long. Is that right?
That's 100% correct, because right now, when they look at your credit, it's like they take a picture. It's not going to be like that anymore in the future. It's going
Yeah.
to be like a movie. So
Ooh,
that's why I'm saying that they're going to look at those transcripts. So you
wow.
have to think about, okay, I'm trying to get into a university, top-notch university. So I have to play this game this way, thinking of the past, not only like, okay, I'm going to go for funding. Let me 30 or 60 days before pay all my credit cards and get up to date. That's not going to work anymore in the future. And that's
Gotcha.
definitely where we're going. We're heading that way.
Huh. Yeah, I feel like in some ways it's kind of scary, but if you really stop to look at, how much credit card debt we have as a nation, which I think is like 34 trillion, it kind of makes sense because now that new model is going to really force us to rethink a lot of things, right? And so we're going to have to basically figure out how to play a brand new game essentially. So that's going to be very, very interesting. The other question I had, since it's just on topic and we're here,
Yeah.
I know you mentioned like credit score versus credit report, and Ace was asking the same question. What are the different type of reports that are like sub credit reports? Because we have the credit reports, and I know you're going to go into some of these things later in the training, but is LexisNexis like a consumer report? What does it focus
Yeah.
on?
So LexisNexis, it's, the secondary credit bureaus. It's Innovis, ARS, which I think is the one usually that the medical records are in. But let's say right now that you haven't paid your car, and your car is about to be repossessed. That's how they're going to find you. They're going to find you through LexisNexis. I was actually helping a friend of mine, and when we pulled her report, she had 200 pages of LexisNexis. So let's say that you got money from a lawsuit, or let's say that you owe money in your tolls. A lot of people don't pay the tolls. I don't know here. I don't know in Florida, in California, I know it's freeway, but over here we get a lot of tolls. So it all depends, but the things that you're going to find there, if you're trying to rent an apartment, if you're trying to go for employment, that's what I'm saying. So it depends what you're trying to do. But yes, there's definitely a difference. Depending on what you're trying to do, they're going to check this. And like I said, I had a friend that he was trying to get car insurance. He's like, okay, I'm going to freeze my car insurance. Guess what? He didn't get the car insurance. Two things can happen. Either you can get denied, or they can give you the most expensive car insurance.
Oh
So
boy.
just so you understand, let's say for people that, were not paying their mortgage, and then the mortgage, tackles on in insurance, and it's the most expensive insurance. It's the same thing with cars. So if you try to be slick, you're not going to be slick at the end. And what's going to happen, you're going to end up paying more for everything. So you want to try to clean up not just the 3 credit bureaus like we all think, but you want to go into, I would say, at least LexisNexis and see what you find in there.
Gotcha. No, I
Yeah.
love that. That's amazing advice.
Yeah.
Cool. Let's keep it moving. Good stuff.
Okay. So this is understanding what goes into your credit score. So this is really important, which a lot of people don't understand this. And I'm going to give it to you a little bit different. So every credit score, we all know it's between 300 and 850. But when the banks look at you, what do they think? They're looking at 850 to 750. Excellent. So a lot of people are at 800 or 810 and they want to get to 850. Does it really make a difference? Probably not. Anything above 750, if your whole profile looks good, you're probably considered, excellent. So at least you want to have 5 primary accounts. And when I mean primary accounts, I'm not talking about credit cards from Macy's or Walmart. I'm talking about good credit, good credit cards, good primary accounts as well. So as well, not only primary, but that you own the account, not that you're piggy bank over somebody else. So those are primary accounts. At least 2 accounts that, at least 2 years of age. You want to make sure to stay, because this is something that the utilization, I put here 10%. But even when you're trying to apply for a credit card or something, it still tells you just stay under 30%. And a lot of people think that being under 30%, they're going to be okay. And they're incorrect. In fact, just so you guys know, anything above 48% in your credit is considered the max, that you get the maxed out penalty. So if you have $1,000 credit card, if you're at, let's say, 400 and something dollars, don't think that you're not considered maxed out. The credit card considers that maxed out. So always remember this. Anytime you're above 48%, you're considered maxed out on the utilization, and that nobody tells you. So unless you've taken credit classes, you wouldn't be able to know that. So you want to always stay under 10%. That is the most important. You definitely don't want to have any negatives. And when I mean negatives, the charge-offs, the collections or any debts that have been sold, any bankruptcy or anything like that. And you want to be at 100% payment on time. So payment on time and utilization are probably one of the most important things. If you're between 749 and 700, you're considered good. That's at least, oops, that was fast. That was at least 3 primary accounts. Age might be lacking. You're still maybe a little bit new to the game, because to get 700 is very easy. I'm going to give you an example. Let's say you have a child that's going to turn 18 years of age now. If you put them on your credit 6 months prior, when that child turns 18, they already have a FICO score of 700. So getting 700, if you don't have anything negative, is definitely very doable. Okay, so just so you guys know. Again, you want to stay under 10% utilization. That's really important. And 699 through 650 is considered fair. I personally have gotten patients approved with Synchrony Bank with 650, probably even under 650, but just so you guys know. So it's still doable. Maybe they looked at everything else, but you want to try not to be here and fair or be bad boys. So 650 and 699 is easy it's easy to get here, no credit, didn't know any better, possible missed payments, and few accounts. And if you're bad boys, you definitely have all the negatives. You miss your payments all the time. You have high utilization and you have many inquiries. Because guys, if your credit is not good, don't keep running your credit.
Yeah.
That's like, a lot of people think they'll come into my office and they're like, I always ask them, how's your credit? Oh yeah, I got good credit. I just bought a car. Guess what? I try to get them approved and they get denied. What they don't understand is, yeah, you got that car payment at a very high interest, but the only reason that you got it is because if you don't pay for it, they're going to come and repossess it. But if you don't pay your credit card, they're not gonna come and take your dentures away. So that's why you guys gotta understand really what good credit is. And not because you bought a car and they gave you a car at a very high interest rate, that does not mean that you have good credit. So good credit means that you want to try to stay at least at 700 and up. That is considered good credit. And that's when you're going to be able to not only get the car with a low interest rate, but you're going to be able to get the credit cards, the personal loans, the revolving loans, and so on and so on. I mean, you were in the funding game, JP, so you probably know what is considered good credit and bad credit.
Oh yeah, 1000%. I think the way you laid it out is perfect. And the reality of it is even in the 650 to 699 range, like you said, could some approvals still happen? Sure. But more likely than not, they're going to be really, really low limits. And they're also going to be lower tier like credit products, right? You're not going to get the big boy credit cards with the big limits. You're not going to get the cash backs. You're not even like 0% credit cards are pretty hard to get with 650 to 699. And it's been like that for a while. The interest rates are just the killers. And I was actually reflecting on this while you were speaking. And I think, I remember when I was a lot younger, I definitely had some hiccups because I was figuring everything out on my own. But I feel like when you're in a place where your credit isn't primed, like 700 plus, and you have the accounts and all of that, it's almost like you're better off focusing on your job, your career, and your income instead of trying to go get a really low tiered crappy credit card. It's not even worth it at that point. Because let's say you do get approved and they give you $300 or $500. Okay. Can that help some people and some families? Sure. But even those low tiered credit cards, right? Let's say the Credit One banks and the Open Skies, they have annual fees for that $300, $500 credit card, right? And on top of that, they not only have annual fees, but sometimes they actually have monthly fees. So instead of the annual fee, they will charge you like $5 a month or $15 a month just to have the card open. And just think about it from like you being the customer, like, does it make sense? Essentially, you're paying a subscription just to have a card that doesn't even serve a purpose for you. And God forbid you do put $300 in. If life happens and you can't pay it off, the interest rates on those things are terrible as well. So in the end, like, you're just better off focusing on income, work, career, and don't fall for the pre-qualified offers in the mail if your credit is in this situation.
Right, 100%.
Yeah.
And now that you talk about when you receive those pre-quals in the mail, I think it was Credit Karma. They got in big trouble or they were being sued because basically they make you think that you're going to get approved for all this, and it's really not true. So a lot of people were applying, of course, getting another inquiry, and they were not approved. So be careful when you guys receive things or when you guys are on Credit Karma or any other one, Experience or all that, and they're offering you credit products, because this is not 100%. So you gotta
1000%.
make sure. Yeah.
Yep. Just to add to that really quick, that was actually a really good point. I was once in the financial technology space for business, and so I learned how these platforms actually work. This was like several years ago. But pretty much platforms like Credit Karma or any platform that have recommended approval odds and things like that, guys, those are all advertising space for those credit card companies. So they'll take the soft pull data that's on the platform, and based on those parameters, they'll make an estimated guess of whether or not you qualify for the card. But here's the problem. When you say approval odds high, that could be based off of data from weeks ago or whatever. It doesn't mean it's up to date, nor do they really care, because the way they make money is through having users on the platform and through people applying for credit cards on their platform, and then they get a kickback on the commission on that. It's literally affiliate marketing, but in the tech space. So that's another thing I just wanted to share with you guys. And that doesn't apply just for Credit Karma. What's that other platform called, like Mint.com, and any platform that just recommends it, just know it's affiliate marketing and it's not accurate.
Right. Yep. 100%. Let's go to the
Cool.
next slide. Whoop. So what is the end goal with credit? Let's see. So this answer is different for everybody. I listed some things here, the common answers. Paying less for your lending, having leverage over lenders, because remember, when you go in with good credit and you're trying to get approved for something, you definitely have some leverage on your side. You know, when you go in and try to apply for something and your credit is not that good, what's going to happen? They're going to come back if you're trying to buy a car and they're going to be like, well, your credit is not that good. So, you know, I understand you can only pay 400, but unfortunately, all we have is this loan at 600. What do? You go for it because you have no leverage at that point. So when you go in with good credit, you definitely have it on your side. Okay. Also, you know, emergency coverage. Like I said, we've all gone through that. I personally have gone through that many times. You have a higher quality of life when you have good credit. Owning your own business, you can either be a lean setup or you can be a maximizer. It depends. Lower daily expense when you're buying things on a daily base. If you have good credit, you're definitely going to have a lower interest rate, or like we all like in here in the Radical Marketer, 12 months interest free. So, you know, only owning a few cards. If you're a maximizer, you obviously going to have more. Jumpstart your business because you can liquidate your cards and own your business. And like Rad says, the rich own nothing but control everything. So that's definitely when you're rich. And that's sometimes when you see people, and I think in one of my my last presentation, I spoke about this. If you guys know about the drink Bang, and he was the owner of that, but he kind of had an issue with Pepsi. And of course, he wanted to talk all this stuff in YouTube and everywhere, and Pepsi sued him. So what happened? He went into bankruptcy. So as soon as he finished the bankruptcy, he went into another room, and I don't know how many millions he got to start his business. Well, he never closed Bang, to invest in Bang. So that's the same thing that Rad says, that, you know, the rich people, they don't own anything, but they control everything. Why? Because they use their credit to play around with everything. And that's 100% true.
Love that.
Yep. And that's very true. That's why you see business owners that, you know, go to bankruptcy and then the next day they have a new business.
Yep. That's
Like,
exactly
how did
right.
that happen? So
Yeah.
guys, credit is like, you know, it's
Yeah.
different for everybody, but definitely always try to keep it on tack.
Yeah.
Yeah. So basically what we're going to talk about here is thinking about the quality of credit cards that, you know, so what is better actually? You know, quality or quantity? And I think I had a little issue here, but you want to make sure that when you get approved for credit cards, you want to make sure they're bank issued versus consumer lending. Okay, because it definitely makes a difference. You don't want to get all these credit cards that are basically based on consumer lending. You want the bank issued credit cards, and you want to make sure that when you're trying to apply for a bank, that they issue their own credit cards. You want to have fewer, this is wrong, you want to have fewer credit cards, but credit cards that have a higher tier. You don't do anything with having 20 credit cards from, you know, Walmart, Payless, Target. You know, you want to have maybe 5 or 10 credit cards that are from, you know, the Chase Bank, the tier 1 banks. So that's something that's really important. Premier accounts, credit cards are the best type of credit card accounts. So you could have on your credit report. So especially when you're trying to go in and buy a mortgage, buy a car, they want to see that you have these big banks on your side. They don't want to see that you have all these. There was actually one that I was thinking of today that I don't even know if it exists. So when people didn't have good credit, oh, and help me out. You used to get it at home. Finger Hut. I think it was Finger
Oh
Hut.
yeah, that one.
I see everyone laughing. Remember Finger Hut? So
Oh my
I
gosh.
had
I'm
Finger
getting
Hut.
PTSD right now because of how many times I've seen that company on credit reports for all the wrong reasons.
Exactly. And then what happens? Finger Hut does not report to all your 3 credit bureaus. What it does, it just probably reported to one, just like I know there's some jewelries that were doing the same thing. You would pay like a monthly fee, and then they would give you $5,000 or $10,000. And I think they actually got sued And, you know, they wouldn't even report to other credit bureaus. But if you didn't pay them, they would come after you. So that's really important knowing, you know, make sure you guys pick the right credit cards, the right banks. All right?
Yeah, big time. Just to chime in really quick, I'm not gonna lie, I'm one of those people that has a stack of like 30 credit cards. I regret it 1,000%. Now when I did funding for myself, I went like all in and I did, I think like one funding round 1 year and then went into like gardening, right? Of not doing anything for 2 years. Then I went and did it again. And it served its purpose. I'm not gonna lie. Like it helped me fund some businesses. I used it very smartly and things like that. Nothing went wrong, except for the fact that when I was leveraging the cards for business purposes, the amount of tracking and time consumption that I had to do to make sure I didn't fall or like fall behind or accidentally miss anything regarding one card, because all it takes is one.
Yep.
And then it screws up your score like 50, 80 points, whatever. And I will honestly, if I had to go back, I wouldn't have done what I did. Even though it served its purpose, I could have achieved the same outcome with less than half of the with half the cards. I could have just gotten B-locks, right? Lines of credit, or gotten credit limit increases on existing cards and things like that. So I love that you talked about that quality versus quantity big time.
And I'm guilty of that. You know, you go to TJ Maxx and they're like, well, if you apply for a credit card, you get like 15% off. And of course, then you go and you apply for this dumb card. But you know,
Yeah,
we've all been through that.
for sure.
So credit account type. So understanding there's two different types of credit accounts, okay? And how to use them. So there's the revolving accounts and there's the installment accounts. So the revolving accounts allows you to borrow, you know, money, a limit, pay it back and borrow again. So you can, you know, pay it back and keep borrowing, like our credit cards, line of credits. For me, I love the revolving accounts. Not only that, but revolving accounts, every time that, since you keep it open, it always, you know, provides, it's always giving you something back because it's still reporting on your credit versus the installment credits. So the installment credits, basically, you know, it's a fixed loan amount. You pay for it and you're done with it. And what happens after? It doesn't report anymore. So let's say you've been paying a car after 5 years. Once it stops reporting, that's it. You don't get any more benefit from it. Let me keep going here. So revolving accounts. So some things that are important to know about revolving credit cards are revolving accounts have no expiration date. The most common example of a revolving credit card is a credit card. I mean, we do know there's loans as well. Having a high revolving credit amount can damage your credit score. So what I mean by this is basically if you have too many revolving accounts and they're high, and your credit profile is not that strong and you went crazy and you applied for all these credit cards, they can hurt you when you're trying to go in for funding or trying to, you know, get approved for a better credit card. Some examples of revolving credit cards that you probably are not familiar with is Chime, Kickoff, Credit AI, Extra Debit, and sometimes the extra debit cards that are considered hybrid, or what they do is like a compatible. So you have to be careful with the debit cards. Talk to the bank before you apply for them, because sometimes those can report as Visa or MasterCard and you don't know, but they're counting towards your, you know, your credit cards.
Love that.
Right. So, and then the installments, some important things to know about, to know about installments is installment accounts evolve in upfront lumps. So let's say you're buying a car or you're paying a mortgage, they pay the lender and then you pay them in the term that you know, came into understanding with them. Most of the time, it used to be like if you're buying a car 5 years, now the cars are extending 72 months. I've seen even 84 months.
Whoa.
Mortgage, most of the time it's 30, sometimes people do 15. You know, they have bank loans that also go like for 10 or 15 years, personal loans that are installments, school loans, and consolidation loans. So a lot of people think school loans. So, and they're in a hurry to pay off their school loans. And I understand, because you have interest. But sometimes a school loan not only helps you because it's helping you if you already owe a little bit less, still in the credit, but when you're doing your taxes, if you're making money and you still have that school loan, it helps you as well. So you got to consider other options as well. So don't go crazy trying to pay all the installment loans. You could pay more. So it just reports that you owe less, but it doesn't really mean that you need to pay it off. Okay, guys? So that's just a little bit on revolving and installment loans. What is an AU? So an AU, we all know it's an authorized user that somebody puts you on their credit, on the revolving credit account to benefit you. So your credit goes up, it depends what you're using it for age. It's also referred to piggy banking, but you have to be careful with AUs. There is a law with the AUs that sometimes if you don't live in the same household, you might not get the same benefit. And also when you're getting an AU, you also have to make sure that it's somebody that you really know and trust. I wouldn't tell you to go out there and buy AUs, which a lot of people sell them, because imagine if that person racks up that credit card. Once you pay them the $500, $2,000, there's nothing you can do about it. If they max out your credit, their credit, it's gonna show up on your credit. So definitely be very careful with AUs. A lot of people think that a AU means a trade line. A trade line is any credit that that starts reporting on your credit. So it can be an installment loan, it can be a revolving loan, it can be a credit card. That is what AUs are. So don't get confused out there when people are saying, I want to buy a trade line, I want to buy a trade line. Also, co-signers. Co-signers is definitely different because they don't have the responsibility. I would tell you, be careful if you're going to do any co-signing because that can bite you in the butt and that will come back. If it's not somebody really that is really responsible, or that if that person defaults on that credit, that you can pick up that payment for them, I would tell you not to do it. Because a lot of people lose everything because they lend their credit out. This also happens as well when you're married, unfortunately, and you co-sign for your spouse. Like Rod says, wine them, dine them, but don't give them your credit. Be very careful with that. And I don't want to say the other stuff, but Rod always says that, and this is very true. Let your spouse open their own credit, which is very important. If they don't have a strong credit, then be the AU, the authorized user, and maybe they can start buying some secure credit cards and building their credit that way. It's up to you, to your discretion, but be very careful because I've seen a lot of people, especially people that were married, I see it all the time. Oh, I just got divorced and my spouse destroyed my credit. So just be careful when you guys consider doing co-signing for anybody. What do you think, Brad, about that?
Yeah, let's jam on this a little bit more because this is taking me back to when I worked in banking and the amount of times I would see this happen, and I'm like, oh my God, please don't do this. And it's just, I think, a very outdated mindset, right? When it comes to relationships, marriage, and doing joint accounts on credit cards and even like auto loans, especially when you don't need to. Like if you need to, because maybe one person's profile is a certain situation and you have to do this thing for your guys' lives, right? That's one scenario. But if an outcome of like what you're going to do with the credit is not dependent on like both people's ability to get credit, just see who it makes sense to go and do it and have that conversation. I think it's more like people just don't want to have the conversation, but you should, because things can happen for better or for worse, right? Like we're all human beings, life happens to us sometimes, and you just don't want to get caught on the shorter end of the stick. So I just want to highlight one thing you were talking about. So when you say cosign, is that the same as like a joint account holder? Or is that different?
So cosign is when a person, let's say you're buying a car and I'm going to buy the car under you, but I co-signed the loan. So what that means is it's not like an AU. If you don't pay for that car loan, I'm responsible as well. They're coming after me as well.
Yep.
So that's really important with the co-signers. You really have to understand. And because for some reason, the credit space is usually run by men. I see this a lot. Women always want the men to co-sign. They want to put everything on the men's credit. And, men go along with it. And at the end, they get in trouble.
Yeah, I mean, shit, that's kind of smart. Instead of leveraging other people's money, it's leveraging other people's credit profiles. I love it.
I don't know if it's a Hispanic thing or what, but I see this a lot in Miami.
Oh my God. Okay. So even with like, I know it's interesting because at the dealerships, and sometimes even in banks, they use the terminology cosign. But just for everybody on the call that's here and watching the replay, um, on the credit reports, it shows as joint account though. So let's say if it's a friend that co-signed with you or you co-signed with them, it will show up as a joint account. And
Yes,
God forbid, let's say something happened with them and like you co-signed for them. If they miss their payments, right, the
yep,
late payments start to kick in. If it gets repoed, then the repo gets kicked in onto both
okay.
credit profiles. And here's the kicker, ladies and gentlemen. All right. I'm a little bit out of tune with the credit repair space, but I do remember a time. I don't know if this is still true today, but to basically dispute things that are jointly off of credit reports is like a nightmare. Like the success rate is extremely, extremely low from what I remember correctly. So it's like you could have avoided the whole situation to begin with, and now you're stuck carrying some other person's problem because of something you didn't even do. But anyways, that's the moral of the story.
Yep, 100%. Yep,
Cool.
all right. So, how do I know if I'll get approved? So normally the way you're going to know if you get approved is you have to know your credit. Like I know for a fact that if I go and I apply for anything, I'm going to know my credit. Okay, so is it possible with relatives high accuracies to appreciate the response from a potential creditor when applying for a product? Here are some items to help you do this. Do your research. Anytime I'm going to apply for something, I do my research first. Compare your credit situation to others who have gotten approved for that product. So let's say right now, JP got a credit card for $50,000 from Chase. And I'll call JP, hey, what did you do? Like, how did you get in? And that's what I mean, compare the situation. Because right now that we're in the credit space, we do have the opportunity to really talk or DM other people, hey, how did you do that? How was that play? So you want to make sure that you just don't start applying crazy. You want to get all the information of the bank. What is the bank looking for before you go out and, start applying? When it comes to credit cards, you want to make sure that you do have 100% payment history. That is an almost guarantee unless there's something else going on. Utilization should be around 1 to 4%. So if you just have these two things, 100% payment and your utilization between 1 to 4, that should be a done deal that you are going to get approved for a credit card. Okay, I don't know. For loans and all that, they're probably going to go into more details, but at least for credit cards, yes, they are. Also, you want to make sure that you have at least 1 year. And then here, if your credit is very new, you can consider having an AU. Like I have my kids on, and when they turned 18, they're 22, and their credit is like impeccable. Why? Because I did put them 6 months prior for them turning 18 years old. You don't have to put your kid when they're 15 years old. That doesn't make a difference, and that just puts them at risk that if by any chance you don't pay your credit card, it could report on them. Doing this 6 months prior will get you in the door. So that's something really important to know.
Love it.
Anything
I
you
have
want
a
to
quick
throw on
question.
that, JP?
Yeah, there's a couple things. So the whole 6 months thing, is there a particular reason for the 6 month time period? Is there like a rule to that? How does that work?
Yeah. So a lot of people think that you just turn 18 and you have a FICO score, and that doesn't work that way. You have to have credit reporting at least for 6 months. That's why
Mm.
I say 6 months. It doesn't have to be a year, but it has to be at least 6 months.
Oh, I see.
That's how it works. Like, let's say if you just got to this country, yeah, you have a clean credit, but you don't have credit. You know
Mm.
what I mean? You
Yep.
have to have something reporting at least for 6 months, and that will bring you to a 700 credit score. It's that easy. You don't have nothing negative reporting. So
Yeah.
that's why you have to build credit, at least have 6 months of something reporting.
Yeah. Okay. No, that I did not know. Because I remember again back in my banking days, sometimes I would have families just talk to me privately and they'll be like, "Oh, my kid's turning 18 soon. Should I add them to my credit card?" I'll be like, "When do they turn 18?" They'll be like, "Next week." I was like, "Yeah, and then they should have a FICO score, right?"
Yeah,
And then they would come back like a month later and tell me that they applied for like an additional card so that they had their own instead of the AU and they didn't get approved. And I was so confused as to why it happened. And the bank wouldn't tell us like information like that. Like
right.
bankers don't even know this stuff, which is
No,
crazy. So that's super insightful. Thanks for sharing that.
that's something a lot of the reps, when they come in, they are very knowledgeable about credit, and obviously like they want you to use their credit product. And they're giving you like all the little secrets because they want you to approve as much, patients as possible, or clients, because that's how they make their money as well. So,
Yeah.
it's all a game.
Yep, that makes sense. And then just to touch on, how do I know I'll get approved? You are spot on with the 100% payment history thing. Like if you are as tough as it is to accept this, if you're at 98 or 99, you're taking an L, most likely.
For
And
sure.
even if you get approved, it's not going to be so easy. Like they'll probably put you into pending and make you call. And even if you do get a counter offer, it's going to be a lower credit limit, which is better than a decline. But I have seen banks be absolutely ruthless with like 98, 99% payment history. So really it's 100% or nothing. That's the reality. Yep.
100%.
Cool.
All right, let's go to the next slide. Okay, so, well, here there was some other things of how do you know you get approved. Have 3 or less inquiries per credit bureaus in the last 6 months. Have both a long-term and a short-term installment, okay? So anything above 36 months, so if you get a car for 5 years, that is considered a long-term installment. Anything below 36 months is considered a short-term installment. A lot of people, and I see this all the time on YouTube, get 2 or 3 installments, do 2 or 3 Navy hack, the pledge loan installments. All you need is 2 installments, one long-term and one short-term. You don't need 10 installments on your credit. That doesn't work. Because if you have 10 installments, all they're seeing is that you owe too much money. So
Yep,
get one long-term, get one long-term installment and one short-term installment, okay? You want to make sure you have at least 2 revolving credit cards with major banks that have limits between 5,000 and 10,000. And the reason why I tell you this, because if you start building those credit limits between 5,000 and 10,000, if you want to go into the business funding, this is where you need to be in order to start getting, 3 or 4 times the credit limit on the business side. So always try, if you started with 1,000, 2,000, depending on the bank, look at the data points and check when you can get a line of credit. I can tell you Citibank gives me a line of credit all of the time and I don't even request it. So I don't even need to go to the app. They give it to me because I use it all the time and I pay it off. So you got to understand the banks, but try always to be in your personal credit with credit cards, 5,000 to 10,000. It's very important. Also, if they have the pre-qualification tool, this is really important. Why would you not use it? Why would you get a hard pull when you don't know if you're going to get approved or not? Always, always, always research the product, the credit product, and see if they have the pre-qual tool and use it, guys. It's to
Yeah.
your advantage.
1,000%. Real quick, Jackie,
Yeah.
Sam just brought up an interesting thing here to touch on age of accounts. That's a pretty important part too. I think for me, and you feel free to share your experience too, what I've noticed as the rule of thumb to at least starting to get decent things is at least 2 years, but obviously the more above 2 years of history and age on your accounts and overall as well, then the better you're set up for. What do you think, Jackie?
That's 100% correct, especially now that everything is getting more strict. I mean, at 2 years, yeah, you look, but think about it, 2 years, that's all they're seeing. They're only seeing how you paid for 2 years. You're
Mhm.
not somebody that's been paying for 10 years and you're like, you're not at risk. Well, you could be still at risk, but at 2 years, you're more risky. They see
Yep.
you still as more risky. So you have to definitely try to build the years. And that's where the AU comes in. I mean, that's really, if you want to use an AU, for me, that's where it would come in.
Yeah. Oh, you know what? This actually opens up another can of worms when it comes to age. So when it comes to how often you apply for things, there's two things that you have to take into consideration. Number one is the amount of inquiries that you're going to rack up, right? And then number two is how it's affecting your age. So a lot of people think that, oh, I'll apply for a couple cards, right now, and then 3 months later, I'll apply again. And then they just sporadically apply, even though like there's gaps in between, it's still within like a year's time. So they're not really allowing the accounts to age together over a long period of time. So that's just one thing I learned, like through my own experience. And I haven't like applied for anything, I think in over 2 years now. I'm just letting everything age by itself. That way, when I go back, when they look at the credit report, they're like, damn, like the overall age is there, all the account age is there, and then I can go and have fun.
Yep.
Yep.
Yeah, you're 100% correct. But now that you say that, JP, so my mother is 87 years old. Of course, I leverage her credit too. And not too long ago, I get her emails and all that, and Barclay, her FICO score had gone down because she had not applied for any new credit cards in a long time.
Mm,
So it could work towards you or it could work against you because you're not giving it any new blood. So always
yep.
remember that as well. Even though you might have tons of credit cards and it's been 2 years, always think of that as well.
Basically, there's no winning.
No, definitely not.
I love it. Cool.
All right, let's go to the next slide. So know your bank rules before you apply. Be prepared and get to know specific bank rules before applying. Guys, do your homework. This is what I say on YouTube. Do your research, do your homework. Don't just listen to anybody else. Do your homework and know what you're applying for before you do it, because it could get you in trouble. So know your bank rules. It's always a good practice to be prepared and get familiarized with the bank rules before you apply for anything. Here's an application rules that I was talking about. So I went in and I put Chase because I want to give you guys a little bit of everything. So Chase, a lot of people don't understand Chase rules, the 230. Everybody talks about the 524, but nobody talks about the 230. So Chase Bank will only give you either 2 personal credit cards or 1 business credit card and 1 personal credit card in 30 days. So when I first applied for my Chase credit card back in September, I applied for 2 business credit cards. Right there, like I was trying to be slick within seconds. One approved me right away for 50,000. The other one jumped. Why? Because I didn't know the 230 rule. I didn't do my homework. I just heard what I heard on YouTube. So, check everything, make sure what you're doing before you apply, because it did give me 2 hard inquiries. The good thing was, JP, that one of them just dropped off.
Nice.
I did call right away and they're like, they just fiddle me up, back and forth. And at the end, they didn't approve me. They said that it had been too much time, but they never explained why. So until I knew this rule, I didn't understand why I didn't get approved on the second Chase card. So just guys, do your homework, do your due diligence before you're applying. Okay, so and here, trying to apply for more than this will most likely lead to a denial application. You should wait 90 days between application, okay? And sometimes we have to wait a little bit more because, like I said, banks are getting stricter and they know people are playing around. The 524 rule, you guys probably all know that, is you shouldn't have more than 5 personal revolving accounts within the last 24 months opened. Okay, but I'm going to tell you something about this. So I applied for my Sapphire card and it jumped. And then I looked at my credit report without lying at least 5 times. So I was like, okay, I'm fine. But it jumped. So I went back and I looked again at my credit report and I'm like, gosh, I opened Home Depot because I got 6 months to buy my pool pump.
What do you mean it jumped?
Like it didn't approve me right away.
Oh, I see. Gotcha.
But then I didn't see it. It was one of those things where you're checking your credit and you just overlooked it. But you know what? They called me back and it was something to do with my address because I have one of my LLCs with my mom's address. So sometimes my address jumps and I was approved. So even though this is a rule, I did get the credit card and I was approved for it. The only thing I can think was that card was about to like fall off the 2 years, like within 2 months. That's the
Mm,
only thing I can think of. So to every rule, there's an exception.
there's a little bit of luck involved.
There's exactly. So
I,
go ahead.
yeah, I was gonna say, if I'm not mistaken, I don't know this to be 100% like guaranteed, but I think if it's the Sapphire Reserve
Mhm.
or the Preferred, and if you have a really like clean profile, I think for those particular cards, because it's their higher tiered cards, that they might make an exception. I'm not gonna say consistently, because in their mind, they're like, oh, this client's eligible.
Right.
They have a very strong profile. We know they can pay. We want to actually build the relationship with the client. We'll give them a juicy credit limit and they're willing to pay the annual fee. So the relationship portion of it, yep, Sam, exactly. The relationship side of things may kick in. But again, I think it's discretionary. It's definitely not a consistent data point.
And now that we're talking about this as well, I want to say this. So when I applied for my business Chase card, I still don't have a Chase banking account. And I did get approved $55,000 on the business side without having the banking relationship.
Love it.
So maybe I would have gotten 75, maybe I would have gotten 100 having the banking relationship. But
Mhm.
it's possible. And the thing is, they're looking at the transcripts. They're not looking at the grade. They're looking at the transcripts. And that's what got me in the door with them.
Nice.
So, just knowing all the information before you apply definitely helps. And having some luck. So, oh, no. So here that we're talking about Chase. Okay, so Chase Bank. One Sapphire rule. So we're going to talk about the Sapphire rule. You cannot hold more than one at a time. So a lot of people don't know that. So that's something you have to know. You also have to know about the 48-month rule. Chase has a lot of rules, to be honest. They do give you high limits, but they do have a lot of rules that a lot of people don't know. I know right now, like let's say I also have the Chase, the Southwest card. So because it's not directly from Chase, I think Chase is kind of getting a little bit more lenient when it comes to the 524 rule when it comes to those cards, just so you guys know. So the 48-month rule allows you to automatically be eligible for a new Sapphire card and earn the welcome bonus points. So a lot of people like to get the cards, use it for a year, close them, and then come back and reapply. So if you don't know this rule, you're not going to get in again. With the Sapphire card, you do have to wait 48 months. After 48 months, you can reapply and you will get the bonus again. But if you do it before that, you will not get the welcome bonus. So that's something that a lot of people don't talk about and they don't know. So imagine closing your Sapphire card, going back 15 months after, reapplying, and guess what? You got approved. You got another hard inquiry, but guess what? You don't got the points. You don't got the bonus points. Why? Because you didn't do your homework. And that's what I'm talking about. You got to do your due diligence. You got to data mine the banks. You got to check, and you got to double check and triple check before you apply for any credit product. So most of the time, Chase is going to do obviously a hard pull with experience and sometimes with Equifax as well. I know a lot of people like to freeze Equifax, so they only go into Experian. I personally have never frozen, my credit. I see it differently. If I'm gonna get approved 10, 15, $20,000, I'm not worried about the hard inquiry. That for me makes no difference. I want to make sure that when I apply, I get approved and there's no hiccups. And that's one way of not having any hiccups, is not freezing any of your your credit, the credit bureaus, just so you guys know. And something I want to say something too, if you guys, because most of us obviously we have frozen our credit, credit profile, and that's the best thing to do. Whenever you're going to go apply for a credit card, and you know that you're going to apply, unfreeze your credit 48 hours in advance. Because a lot of people tell you to do it 12 or to do it right before. No, do it 48 hours in advance. And I'm going to tell you why. Sometimes I'm trying to get patients approved and they did it the day before, or they do it right there and there, right there and there. And what happens? There's a hiccup. It jumps and they don't get approved. So make sure that when you're ever going to unfreeze your credit, do it 48 hours in advance. That's just a little tip. That's just something better, so you don't have any hiccups along the way when you're trying to get approved.
Oh, I so agree with you on that. So just like a little bit of a story time from like the funding space. A lot of people that go through funding at some point went through a credit repair process, right? They play the credit game, they freeze their credit bureaus and all those things.
Right.
And sometimes we have the conversation with the clients and we're like, hey, we still see locks on there. This is how you go unfreeze it. This is what you have to do. And then from there, we'll wait maybe 2 or 3 days, like business days, to make sure you're in the clear before you do anything. So they will say that they did it. And sometimes, rather you're calling or something happens, you want to like double check that it's actually unfrozen. So don't just do it once. If you need to hang up and call a different rep the next day, then go ahead and do that. Because
Right.
here's the thing, I've had nightmare scenarios, no lie, with Chase included, but amongst other banks. When you have the freeze on your report and you go apply, not only will you get declined, right? Like, yes, you can get it overturned if you have the strong credit profile, but you want to avoid nightmare scenarios like these. They literally would force clients to go inside the branch. I hate going inside branches. Go inside the branch, take social security cards, IDs, and whatever. And then the bankers, they don't manage a lot of these things in those branches. It's not their job. So they put a bunch of notes and then have to scan the old-fashioned way, all these documents to the back office. And then by the time the back office people finally get their hands on it and then get it to an underwriter, and then the underwriter's like, okay, now we're clear. You've lost 7 to 10 days on that alone. So if you just prepare and double check and undo these things, you're going to save a lot of your time, because at that point, time is valuable. To lose 7 to 10 days for a whole lot of nothing makes no sense. So there's a quick story for you guys.
Yep, 100%. And just piggybacking on that. So I've worked with Lending Club, and Lending Club, when something like this jumps, exactly, we have to scan the license, send it to them, and sometimes they make the client wait 10 to 15 days before they're going to get approved, but they have to wait, or then they have to wait to get the card in the mail. They cannot just give me the account number. So, yep, 100%. Do the things right from the beginning. That way you don't have any hiccups going forward.
Yep.
Right. Let's go to the next slide. How to season bank accounts. Okay. Learn attraction accounts practices to aid in future applications. So how to season a bank account. Seasoning a bank account refers to using special accounts practices that create attractive accounts for further creditors. Some of these practices include having several deposits. So a lot of people think when they're going to season a bank account that they're just going to go, they're going to open the bank account, they're going to put, $1,000, even $10,000, and that's it. That's not how it happens. You got to put several deposits. You got to do at least 7 to 10 transactions on a month. There has to be no overdraft. Try to go to the bank if it's possible, if it's in your area, in person, and getting friendly with the account manager, with the relationships manager, with the tellers. Get to know them by name, and they get to know you by name. I'm telling you because I've seen this happen. When you have an account that overdrafts and you have a friend in the bank, they're going to help you all the times because you've built that relationship with them. So it's really important. Like right now, I'm I'm in PNC. So what do you think I do in PNC? I have my direct deposits. I'm paying stuff from there. I'm not just putting money in there. Also, when a bank right now, banks are getting so strict. When a bank is trying to give you a business loan, a BLOC, if you're trying to play the game of just transferring money from another account you own, be very careful. You know, because what happens is they can check who owns that LLC or where it's coming from, and they'll know that it's just you. So you got to be smart. You got to let the bank know that you're invested in them. And one way of knowing that you're invested in them is basically doing the transactions, putting direct deposit, and just basically seasoning the bank, you know? And like I said, if it's in your area, if it's not geo restricted or anything like that, try to go in 2 or 3 times, go in before work, go in after work. And even if you're depositing $100, become friendly. And this might sound funny, but when you go to the bank, try to look nice because impression does go a lot far away. You know, when they see you and you look nice, they're like, wow, this person has money or this person. Trust me, that all that counts when you're trying to get some funding at the bank because they have an impression of you. You know, it might not be, you might be poor and I mean rich and going not looking sharp, but try to look, a little bit sharp when you're going in the bank because trust me, it's going to get you a farther way. And that's with everything in life, I think.
That's true. I wholeheartedly agree with that.
Yeah.
Yep. Cool.
So, and also pay your credit cards directly from there, pay your utility bills, anything you can do while you're using that bank, try to do it at least for 3 to 6 months before you go in for any BLOCs or any funding.
Yes. No, let's actually talk on that really quick.
Yeah.
So I can confirm this, guys. As a former business banker, like we can see all these parameters on the back end. So like if the bankers can see these things, business bankers can see these things, underwriters can see these things as well. It's all in their like tech setup and all that, right? Think about this with the new checking account bonus offers like that come in the mail or that are online. They're like, oh, get $300 when you open a checking account. What do you have to do though? You have to set up your direct deposit with them. Sometimes, and not all banks, but some of them says you have to use their debit card like 7 times in the first 60 days or like every month for 3 months to qualify to get that bonus. And that those are all data points that say, oh, this person is committed to establishing a relationship with us. And then here's the other part that I want to share with you guys. The overdraft situation. Guys, literally, it's so algorithm based. It could be one time, or if you have a history of overdraft, it doesn't matter. There is no, oh, it doesn't matter for the system after 2 years, 5 years, 7 years. It doesn't matter. There's literally a number of overdrafts, and I think it's measured on a yearly basis, if I'm not mistaken. But if you go and get overdrafts, you're not going to get credit offers in the mail or presented at the branch for you. And even if you do get a credit offer in the mail, maybe it was a fluke in the algorithm that sent you an offer. You can actually get declined because of your damn behavior on the consumer deposit side of things, even though it's not credit related. They'll give you some BS credit related, reason in the decline letter. But if you read the decline letter and you have overdrafts and you're like, these reasons don't make sense, just know that they're penalizing you because of how you manage the relationship on the deposit side of things.
Right. So just now that you're talking about overdraft, actually on my YouTube channel, somebody asked me a question. They're like, I deposit like around $40,000 a month, but I have the overdraft protection, but I overdraft all the time. I'm like, listen, you can overdraft one time. It could be a hiccup, even if you're not paying extra because you have the overdraft protection. You look sloppy. You look like you can't handle your bank account. I mean, it doesn't matter how much money you put in there, you're still overdrafting. So something that JP said, is very true. Like even if you have the protection, the overdraft protection, try not to overdraft because that looks negative. You don't look fundable. You look like you're messy and you're not responsible. So try not to overdraft. Anybody can have a hiccup. But if you have 3, 4 hiccups every month, that's unexcusable. I mean, that's definitely going to be a no-no when you're trying to get money. Yeah.
Exactly.
Yeah. Great point, JP.
Mhm.
All right. So what is ChexSystem? So ChexSystem is a consumer reporting agency that tracks every financial account you've ever opened and your behavior with them. Okay. And what it does is with the checks, not with credit cards, with checks. If you're having trouble getting accepted for, I put here credit card, but it's not for a bank account, you gotta go and see and talk to the ChexSystem, pull your report and see why. A lot of people don't understand that ChexSystem exists, or they think that when you apply for a bank account, they think that's part of like a credit card, and that's not. ChexSystem, it's its own system. Let's just put it that way. So common questions about ChexSystem. What appears in a ChexSystem? So things that do appear in ChexSystem could be bounce checks, overdrafts, negatives. If you abused your ATM sometimes, I've seen that. Sometimes you don't realize, but let's say that you had a bank account and you left and you owe money to that bank. That's usually the number one thing that appears. And since we're all here and we like to have multiple banks, because we want to get the funding, we got to make sure that our ChexSystem is reporting correctly. So if you're having problems opening checking accounts, this is one place that you have to check. So how long does it stay in your report? It can stay up to 5 years. So that's a no-no, guys. If you have problems, try to fix it because it's definitely not going to help you when you try to, get into a bank account, especially if you're trying to get it into, let's say, Chase, because then you want to apply for the Chase credit cards. It's not going to let you get in. So you got to fix it. How can you get a copy of your ChexSystem report? Well, you can receive the ChexSystem report for free every 12 months, so once a year. But if you've been denied for a bank account, you can request one within 60 days. So that's something that's really important. Also, what you can do as well, this might work, it might not work. Sometimes if you call the ChexSystem and you tell them that you want to get off their system, sometimes when you're trying to, apply for 6 or 7 banks, this might work because when they call, there's nothing under your name. So you have to call the ChexSystem. This is a little hack people do. And they tell them to get, they remove themselves from the ChexSystem. I've never done it because I've always paid my stuff on time. And, my ChexSystem is probably A1A, but you got to check. I understand that a lot of people have open checking accounts, unfortunately, and couldn't pay, and they left the bank and they jumped to another bank, and it's reporting against you. And you might jump to another bank because it might have gotten accepted with that bank because the ChexSystem still has not reported. But trust me, once those banks report, you're not going to be able to get another bank account. Yeah, you might get one of those second chance bank accounts, but you're probably not going to get a primary bank account. So try to fix it. I put here, all you need to do is access to access the report is your basic information, okay? And here is the ChexSystem. You can report it, you can request it online. And I'm sure, being in the banking system, about the ChexSystem, how it works as well, JP.
Yep. Yep. So I was just reflecting on this. I don't know what I'd rather have. I think I would rather have one late payment or 2 late payments on my credit report over having a bad report on ChexSystems. Like not being able to open bank accounts. What a nightmare. Like credit is something that's manageable, even if you're rebuilding, if you're establishing whatever. Bank accounts are a totally different beast. Like you are screwed. And I'm so familiar with the second chance accounts because I used to work with business owners that had messed up check system accounts, right? So they had trouble getting regular checking accounts. So imagine as a business owner that you're used to managing large amounts of money, right? It could be hundreds of thousands of dollars, tens of thousands of dollars, what have you. On the business side, you're good. But on the personal side, for your everyday life, you're stuck with a debit card that you can't spend more than $500 on, and you can't take out more than 500 bucks at the ATM either. And they will not increase those limits for the life of them. They just won't do it. You can go to 100 branches and talk to 100 bankers and have the bankers call 100 reps. No one can fix a damn thing until the 5 years are basically up. Like it's total disaster. So you know what? Give me 2 late payments. I'll be happy with that. Give me a clean ChexSystems report. All right.
And a lot of people might say, well, why do I need checks? Nobody gives checks anymore. It's not about checks, guys. It's about, getting into that bank account and getting that bank account products or being able to pay your stuff through the bank. So you might not use checks, but you still need a bank account. So let's just clear that. And when it comes to checks, I'm going to tell you a little story. So when I was a teenager, it was cool. Me and my friends, of course, when we turned 18 and we opened a bank account, we would take the checks and we would run them off and buy a whole bunch of stuff. And guess what? After you doing that because you're young and dumb and you think it's fun, then when you want to give a check, let's say in that time in Publix or something, whoop, they don't accept your checks. And then you got to go back and fix all this. So I know some people still play. I mean, it's harder now because even when you give a check, now it goes in through a machine and they know. But guys, don't be dumb because this comes after you. We were all young and dumb. This does come after you and it haunts you after. And like I said, you need a bank account. That's just the way it is. People send you Zelle, you pay your stuff from the bank account. And if you want to later get, other products from the bank account, you definitely need a bank account. So try to keep this in check.
Yeah, big time. And just as a story too, I think similar to you, Jackie, when I was 18, I wasn't taught any of this stuff. So it's funny that I ended up having a career in banking and doing all this stuff. But I was so irresponsible when I was 18. I think I was banking with Wells Fargo, which funny enough is where I had my career at. But my mom gave me an account and she didn't explain how it worked or anything like that. Then one day, I think I went to the beach with my friends and I was running the card and it was going through, and I was like, oh, great. I guess everything is fine. And after that, I think my mom called me and she was like, oh my God, what are you doing? Blah, blah, blah. I was like, oh my gosh, I'm going to get my ass handed to me. And I did. Then so she covered the situation that her 18-year-old son created, but the damage was basically already done. Here's the thing, I didn't learn my lesson the first time, right? So as I became more independent from ages like 18 to 19, I screwed up again. I think I went like down 200 bucks and I was like, you know what? I'll go like open up another account. I'm not paying this, yada, yada, yada. So cool. I got away with it. I went and banked elsewhere and I was like, bye, Wells Fargo. I don't care about you. And then here's where things got really crazy. I think I turned 20 years old and I was starting to get more responsible with like my entire life. And so then I tried to like open up a brokerage account or something like that and another deposit account. And then I started to see the problem. And I was like, oh my God, I literally can't open an investment account. I can't invest in stocks. Like it affected the broker accounts as well. It was like really, it was a deep problem. And then who saved me? Wells Fargo second chance account. Oh my God, I have a lot of history with that bank. So I went and banked with them, and it was the biggest pain in the butt. And all the scenarios I shared with you guys about like other people dealing with stuff, like I saw people's lives, like they couldn't pay rent. They had to leave their jobs in the middle of the day to get cashier's check to be able to then cash it out and pay their rent. It was a mess. For me, I just had like minor inconveniences of like, oh, I need to pay this school tuition bill. Can't pay it because there's a limit on the credit card, right? And things like that. So I just had to suck it up I guess I did it earlier on in life, but I think by like year 4, it wasn't as big of a problem, but it was like the most inconvenient 2 to 3 year time frame I ever experienced. But there are other people that have multiple accounts that get closed out in the negatives, and they feel it the worst. Like they're like, hey, it's the full 5 years for you. You're not going to have access to anything and you're going to suffer. And it's like the worst thing to like witness and experience big time.
Yeah, no, and definitely not. Like I said, in my time, you would give a check and it would just go through. But now when you give a check, it goes through the machine and they know if that check is good
Yeah.
or not. So guys, don't play it.
Yeah.
All right, so let's go to the next slide. Okay, so ADP and Plastique. So how to run it correct, and you can also hit a bonus. So yes, a lot of people use this play to liquidate their credit cards, and you can do it. But I would tell you not to do it, not to play around. You could probably take out some money if you need it. But if you use this the correct way, you can hit your bonus, because when you're taking out money with Plastique and you put your credit card, you can still get the bonus points. So it works. But if you put ADP, which is basically like a payroll, you can pay all the costs that you need from your credit card. You can pay yourself the right way. You can pay your customers, or you can pay your workers. So there's a lot of people that are running this play and really doing it the wrong way. And I wanted to touch a little bit on this. Also, when people come and they try to give you their affiliate link for, the ADP, sometimes they can get up to $1,000 per client to bring them on board. And you also have to remember the ADP or none of these people are CPA, so you can get in big trouble. Because I've heard people on YouTube, and actually I logged into another mentorship, and there was a rep from ADP, and he was like, people were asking him, hey, can you like liquidate the card 30, 20, 40, 50,000? The guy was like, yeah, I can. Like, he would laugh, but he would say he could. Do you think you're not going to get in trouble? You're definitely going to get in trouble. So whenever you see this, be cautious. I mean, ADP is good because you can create, the pay stubs, and it works. If you do it the correct way for your business, it could be done correctly. And like I said, if you need a little bit of money, you could liquidate some. But if your mentality is to get 40, 50, $60,000 from the credit card, you got to be careful, because not only can you have tax issues, but you can definitely have problems even with the FBI. This is not a joke. You have to be careful what you're doing out there. Don't just listen to people. I sometimes put Venmo, on my credit card with my Chase, and I'll send my daughter, $1,000 or $1,500, and I'm like, hey, send it back to me because I need it. You know what I mean? That's not what I'm talking about. I'm talking about when you really want to liquidate your cards and this is the game you want to be playing, you're going to get yourself into trouble. And I see a lot of people in YouTube talking about this and talking about ADP and how to do it. And I just want to tell you, stay away from it. Use it the right way if you're going to use it, but don't get caught up in all that, because right now there's a lot of investigations coming on. Like I said, the banks have lost a lot of money, and you never want, the police or the FBI or none of those, no law enforcement, coming in, knocking in your door or knocking in your job, because you might think you're not scared, but trust me, when it happens, you're going to be scared. So, I'm just telling you, it is possible to liquidate and get money through here, but just do it the right way, in the ethical way.
Good stuff. Deshaun was saying there's some like new methods as well. I remember plastic is something that we would refer clients to after they
Yeah.
got funding and things. Plastic started off being a very helpful tool, but I think they made some changes to how they process payments and things like that. So you guys just want to, Jackie's been saying this all night, just do your due diligence, right? A lot of people, when they hear about a play or like, oh, it might work, instead of testing it with a small amount of dollars, they go all in because of that desperate mindset to liquidate and to do whatever it is that they're doing with money. but you want to do these things like, you know, at your own discretion. Like we're trying to make you aware of what could work, but things are literally changing all the time. And companies like ADP and Plastic particularly, Plastic is a tool, like as a tech company, that has grown a lot in the last, let's just say 4 years, what have you. And the more a company like that grows, the more scrutiny they face as well. So if they start getting linked with potential like money laundering things, right? And all this money movement stuff, they don't want to go sit in front of the FTC, SEC, Congress, and things like that. So again, just do it at your own risk, but test it out with smaller dollar amounts, see if it works. And like with anything else, we talked about seasoning bank accounts. Think of it as seasoning these tools. It's like, all right, let's do things in increments of like $1,000 or $500. Okay, cool. Now let's test out $2,000. Let's test out five. But I remember people would be like, what? I got my funding and you're telling me to break it up into like 5 payments, like once a week. I don't have time for that. I was like, okay, cool. Yeah, just run the whole $40,000 and, you know, let me know when you need bail money. Okay. Like, you know, just really think about it on a high level.
Yep. Now that you say that, so of course, when I saw the play, I tried to do it, and I tried to do it from one LLC to another. And I'm like, it was like for $1,500 or something. And they sent me like, oh, it went through. The next day, I got an email saying that there was something wrong and they refunded my credit card. So they caught right away that I was doing it from one credit card to, from one business to another, and they were both mine. So you guys gotta, be careful what you do and how you do it, because trust me, they're catching on. And now that you talked about, money laundering and all that, now that we have to, with the LLCs, I can't remember right now the name, but we have to report it to another company and explain what our company does and all that. Like this year, if we open it this year, we have 30 days. And if our company was open from last year, we have up to December. Why do you think they're doing that? Why do you think they want more information? Because they're checking, they know all these plays, and they're you got to be careful. Definitely. I'm not saying that if you do it, it's not going to work. It probably will work, but you can also get in trouble. So just be careful, guys.
Yeah, I think it's called BOI,
Yeah,
something
that's
like
it.
that.
That's it. Yep.
Yeah, it's like beneficial owner information. Here's the funny thing though. This all sounds new, but as a business banker, let me tell you, when you go open bank accounts, most people don't read the documents that you're signing during account opening, right? Banks have always had the BOI, but for their records. The BOI is not for the banks anymore. The BOI is for the feds. It's for Uncle Sam and his profits, if we will, right? So increased regulation, right? Everything is there, and they want to crack down on this stuff. And I think it's also because of where we are from an economic perspective. Like taxes in some places or some states or whatever are pretty high. Some people pay more in taxes than others, things like that. They're trying to raise money in however way they can. And they're like, okay, here's the BOI. We want to see where the money's going. IRS wants to take a piece of that pie for sure. And if we catch anybody doing anything sketch, we're going to come after their assets because we need to raise money for taxes because we're trillions and trillions of dollars in debt. So
Yep.
we're playing in a very different field these days as compared to a couple of years ago.
Yep, we sure are. Alrighty, so let's go to the next slide. And double dipping. We all like this. We all like double dipping. Of course, this is the radical marketer.
Chips and salsa.
That's right. Double dipping, triple dipping. So what is it and how can we use it to our advantage? So double dipping. Double dipping is when you receive multiple credit products off of one hard inquiry. So in order to understand double dipping, you must understand that when a bank pulls your credit from a certain credit bureau, it won't be able to see any increase in the other credit bureau. Plus, well, let me finish it. With the knowledge, we can essentially use a single hard inquiry pool to apply for multiple credit products, keeping credit damage to a minimum. So yes, we all like this because sometimes we can go to an institution, we can get our credit pulled, and we can get two products, or you can get, like I was explaining there, depending what you're going for, you can apply for 2 or 3 different products and maybe get 2 or 3 hard pulls in one credit bureau and the other ones won't see it. I personally, when I went to Truist Bank and I opened a business checking account, right there, even without me telling them, yeah, pull my credit, they offered me 2 credit cards, one on the business and one on the personal side. And I only got hard pulled 1 time. So when you go to the bank, you're not going to be, oh, do you guys double dip? Or, you have to kind of like, hey, what products do you guys offer? And, when you're opening a bank account, hey, do you pull my credit? Or do you know what, which of the credit bureaus you pull from, but in a friendly way, not like, hey, how many products can I get? That's not the way it works, guys. You got to be smart about it. And trust me, a lot of the bankers, sometimes when you become friendly, they tell you, but guess what? A lot of the bankers don't even know what you're talking about. You guys know more than the bankers. So whenever you're going, like I talk about, whenever you're going to a bank or you're going to apply for a credit card, check, go online and see, and see what other people have, written about it. And do your due diligence before you apply. Or if you have a friend, I always talk to D, I see he's on the call. And when I'm applying for a credit, hey, what do you think of this? Or, so do your due diligence, because sometimes you would be surprised how many credit cards you can get with one hard pull. It's just basically understanding the bank rules, or the credit card or the credit union rules. So this is really important. And I know that we all love double dipping, because I definitely do it and I definitely love it. So this is one for the radical marketer.
Yeah, I love it. Yeah, give me some Amexes and Chases. I love me a nice double dip there.
Right, that's right. Just like, with Amex, that a lot of people don't know that once you apply for American Express, if you go in through the personal side, then every credit after that, every credit card after that is a soft pull.
Mm,
But if you
game right.
apply, yep, but if you apply under the business side first and then you apply on the personal side, you will get hard pull twice. So make sure you always apply on the personal side first. That's really important.
Ooh, that's good stuff right there.
That's double dipping.
Yeah, another quick tip for you all. This is on the relationship management side and how to double dip there. So
Yes.
if you have, I've seen this, if you have a prime credit profile, everything is amazing, high credit scores, you have all the great data points that banks look for. If you don't have any bank accounts, either personal or business with them, but they've mailed you offers in the past, that means they have your data to some extent, okay? When you go and open a business account or a personal account for the first time, I would almost suggest doing the business for the first time, because here's why. They're going to create the business profile. Then they're going to create your individual profile. Then they're going to open up the business checking account. Naturally, with business accounts, I believe this is the case for most banks. They typically do a hard pull to open up business accounts, okay? Because they do the hard pull for a business checking account, they're already going to know what you're pre-qualified for in terms of business credit products. And then here's the kicker. Because they have to do the hard pull anyways, it might also generate any pre-approval offers on the personal side.
Yep.
And although it's going to be a lengthy ass appointment at the branch, if you do everything in one sitting, you may be able to double dip and only walk away with like one hard inquiry. But if you do get hit with 2, you might be able to argue to get 1 removed. So you could do all that in one sitting just by the letters that you get in the mail with no existing deposit history. Now, some people would say, oh, don't you need to go and season the account? This is for primed credit profiles though. If they've been sending you offers with no previous relationship in terms of cash, that's a pretty good sign. And if you know like, oh, my credit score is like 780 plus, I have all the strong data points, you're good. Now, if your profile isn't super primed, like let's say you're hovering around the 700s, the 710s, maybe you have, one high balance credit card, but the rest looks okay, but maybe you have a couple more inquiries than are ideal, then you might not get away with it. But if it's like super clean to the T, boom, there you go. Amazing opportunity for you guys.
100%. And that's also right there. That's when you're talking to the banker. Oh, is there any other products? You know, you just play dumb. Hey, is there any other products? And that's how, oh yeah, let me help you. I have something else I can offer you. That's how you do it.
Mhm.
Yep.
Yep. I would
Because
no lie, in some of my appointments back in the day, I wasn't in the business of like opening up like personal accounts and things like that. But sometimes when I would see all the offers pop up for the client, that was my way of like basically stealing that relationship from another bank. I was like, yo, I got a primed business client right now. I'll find a way to open everything and anything, right? And here's the other thing too. I remember I used to get so much shit as a business banker because we have this little form we have to fill out, where we have to do like a needs assessment of the client. So it'd be like, oh, what's your goal? Blah, 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 blah. Do you have relationships at the other bank? Right? Oh, what accounts do you have? Because sometimes we can't see what you have. And sometimes clients would give pushback. They'd be like, man, why are you asking me 101 questions? But here's the thing. If you give that information and you say, oh, I have this relationship at this bank and I have a business account that has 50K over there and 100K over here. I have this credit card with this bank. The banker's like, oh my God, you have all this relationship elsewhere. I want to do whatever I can to bring your business over here. Like that's what they're there to do. That's what their supervisors want them to do. So when they're asking the questions, does it sound annoying and kind of cheesy? 1,000%. But in the game that we're all playing, because if you guys are watching this training, like you play the game. That's
yep,
them inviting you to play the game. So play the game.
yep.
Yeah.
I always say that. I'm like, you don't play for them. You got to let the bank play for you. Like you got to know the data points. So when you go in there, you got to be prepared. Exactly.
Yeah.
100% JP. Thank you.
You got it.
Let's go to the next one. So credit card referral program. Okay. And this one is a really good because a lot of people don't understand. And I didn't know this until I joined this mentorship that you have credit cards. You can be making money from your credit cards. And nobody realizes that. So the credit card referral program offers valuable referrals for referring new cardholders by strategizing, sharing referral links, and leveraging special promotions. You can maximize the benefits and earn significant bonus. So focus on the cards with higher, bonuses. And I really, like I said, I didn't know this until I joined the Radical Marketer. I actually opened my mother's Southwest credit card with Chase because I was trying to hit the bonus so I can get the companion pass for free. And that's one way I did it. So I opened the credit card for her and I was able to get that companion pass. So guys, know the strategies. It's very important. Here I put the referral points, American Express and Chase. But you can, with American Express, you can make up to 100,000 points a year. And with American Express, you can make up to 200,000 points because American Express, every time you refer somebody, I think it's like 20,000 points. And American Express is like 10,000 points. And there's also another one, which I was telling JP, I couldn't remember. It's the one from Wells Fargo. I don't have it yet, but that you can just become affiliated with them and you still get the points even though you don't apply for the credit card. Can anybody throw that one in the chat?
Is
It's
it
and it's,
the
it's
build
good for
program?
the build program.
Okay.
So
Yep.
the build program is excellent. I mean, you don't even have to open the credit card and you get all those points and it's really good to travel. So this is something that a lot of people sleep on and they don't realize it. I'm telling you, I was one of them that I had all these credit cards and I refer to other people. I'm like, hey, open that credit card. You can get so much points. And instead of me sending them my link, I just told them to go open their credit card. Like, and people sleep on this all the time. And imagine racking up all those points. So imagine if you're into the travel hacking space, okay? And you have all these points because you're referring people and maybe you're not traveling. Imagine if you took those 100,000 points or those 200,000 points and you booked a round trip vacation for somebody, and maybe that vacation would have cost them $10,000, but you only charged them $5,000 for doing this for them. I mean, it's a way to make money, or if you're a person like me, I use all my points because I go on vacation, but let's say you can sell your points, or you can invest your points in that way. You can basically sell the travel and use your own points. So this is a great way that we all sleep on this, and it's a way to make money depending on how we use it. If you use it to travel or if you use it to basically book, travel for somebody else. So definitely, guys, don't sleep on the referral program because it's a plus. It's definitely a plus. I mean, I basically just got approved for the Blue Business American Express, and I used Deshaun's link. He sent it to me, and I used it. So he got points, and I was like, "Hey, D, what do you think? What credit card should I apply for?" And he's like, "No, apply for this one." He sent me the link.
I'll
So
send you my
that was
link.
that was a that was a win-win. You know what I mean? That was a win-win. So guys, don't sleep on this. This is definitely, and let's say that you're already racked up your points for the year, but you can also, if you have a friend, you can use their referral link, and they can transfer the points to you or however you want to do it. So there's other ways you can do it. So this is awesome.
Love it.
Let's go to the next one. Okay, so this we're going to talk about credit myth. So a lot of people think that credit cards are only for emergency base. And this is something that my parents told me. Credit cards are only for emergency. I deal with tons of patients on a daily base. And there's a lot of people out there that still believe that credit cards are only to be used for emergencies. If you understand how credit works and you understand your behavior, there's no reason why you need to be paying for a procedure or something in cash. Not going that far. My daughter graduated as a dentist 2.5 years ago. She doesn't like to spend money. She's definitely not like me. So she wanted to buy a new car. She had been using her old car, and then she had been using her boyfriend's car. And we're like, hey, it's time for you to buy a car. And this is the question that she asked me. JP, you're going to love this one. Mom, should I take $40,000 and go buy a car? I'm like, what? I'm like, are you crazy? I'm like, cars, that's like the number one thing that depreciates, girl. Save your money. You've been, saving all your income and use it for your house. I said, get the down payment and pay your car on a monthly base. So a lot of people out there, like I'm telling you, my daughter, she went to school, she went to the university, she graduated, she's a doctor, and she still doesn't really understand how credit works. Every time she's gonna use credit, she'll call me, hey, should I apply for this credit card, or should I do this, or I should do that? And, so a lot of people out there, and it's a shame because this is what they should be teaching in middle school, high school, and college. A lot of kids graduate from high school and they're like in another land, in another world. They don't understand anything. They don't understand how the real world works. They don't understand how credit works. And then unfortunately, they get their first credit card, they leverage it, and they get in trouble just for $1,000 or $500.
Oh, I could go on this all day, Jackie.
So, and when I turned, I think it was 17, obviously I wanted a car. And my mom's like, yeah, I have good credit. So let's go to the dealer. I'm getting my new car, right? And when they run my mother's credit, guess what? She has no credit. She's like, well, how can that be? I pay everything cash. How can I not have credit? So in her mind, and by then I'm 52. Imagine I was born in the United States, okay, and I was 16. So she had been here already, let's say at least 20 something years. And this woman still did not understand how credit works. And like I said, there is a lot of people, adults, and then their children's, because the parents don't understand how credit works, and then the children don't understand how credit works. And this is a big problem, and I see this a lot. And, it hurts me when I see patients that tell me, no, no, I don't want to get into credit. And like they take out their money, and I know they save this money to get an extraction, to get a root canal, when they can leverage what I'm offering 12 months interest free up to 24 months interest free, and they still don't get it. They rather use their hard-earned money, and this bothers me. So credit in the United States is a big problem, and understanding how it works and teaching your kids and understanding yourself how credit works is a big deal. At least for me, it is. And JP, you just said this, that for you can leverage on this. You can talk about this as well.
Oh, all day long. I think it's funny. I used to be an 18-year-old that was living with my aunt and my uncle, right, her husband. And he was teaching me all this stuff, and I just didn't get it at the time. Until I started working at the bank, and I was like, oh, okay. And it also like repairing credit for a little bit, and I was like, oh, this is how it works. Okay, it all makes sense now. Now I just turned 28, and my brother-in-law, my wife's younger brother, he's 18, and he's staying with us here in Vegas, going to college and going through everything. And he's like, JP, I want to learn all the things that you learned at this age. I was like, okay. So start talking about all the credit stuff. And he's like, oh my God, this is so overwhelming. They never talked about this in school. So it's like, you can't even blame the young people, because I know there's like a few classes in like 11th grade and 12th grade. I remember I went through like one financial literacy class in high school, but that was really it. They do need to actually teach this stuff in middle school, so it's not foreign to the kids when they actually do become young adults. It's America's idea to say, oh, 18-year-olds have to be adults now, right? But then they wait till they're 17 to even make them slightly aware of how this stuff actually works. So I'm so with you on this. You and I could have a 4-hour podcast on this conversation, but I'll
And
let you continue.
yeah, and then you know what happens as well. The kids come to my office, and they think because they're 18 they have credit, and then they start getting hard pulled. And what happens now? They end up with a whole bunch of increase, and they don't have credit. Yeah, their credit is a virgin credit, but it doesn't mean they have credit. They haven't built up any credit, and of course their parents didn't know anything and didn't put them on the credit. So I mean, this is a big issue. And definitely, like you said, it has to be taught in school, because kids right now, they're graduating and they're in la la land. They don't know how to use credit, and everything is getting very expensive. So definitely I would love to see this taught in school. This is a big plus. So let's go to the next one, next slide. So what is the gift that never stops giving? And it's not you, D. You're not the Energizer Bunny. All right. I don't know what he's doing, but it looks like he's in a treadmill or something.
Yeah, well, actually, maybe he is the Energizer Bunny.
So it's actually a credit card. Okay. The credit card. So the credit card is what gives you the most benefit, because if you never close a credit card, it doesn't stop giving. It gives and it gives. Every 3 to 6 months that credit ages, it's like it counts positive on your credit. If, like I said, we talked about installment loans. Installment loans, once you finish it, that's it, it closes. And talking about kids, a lot of kids think that the first thing they need to get once they become 18 is a car or a school loan, and that is incorrect. The first thing you want to get is a credit card. You want to build some credit with your credit card. That way, when you apply for your car, when you try to get a car, you have a better credit score. You're going to have a lower interest rate. And even when you apply for your loans, because sometimes those loans are private with private banks. So guys, the first thing you need to apply for is a credit card, okay? Every 3 to 6 months, that credit card ages and it counts positive towards your credit. Also, how about if I need to close a credit card? This is a question that I get all the time. JP, you just said you had tons of credit cards. I've closed credit cards. The only way you can close a credit card, if your profile is strong enough to tolerate it, because you do lose some points and you might lose age. But at some point, yes, you could close a credit card, but you have to make sure that you're not about to buy a house, you're not going in for funding, you're not about to buy a car. You want to make sure you do it at least when you're going to close a credit card, at least 6 months prior to any activity that you're planning of doing. But I had, I think it was a Credit One, was it Credit One or Capital One of those credit cards. When I rebuilt it, my credit card, and when I rebuilt it, my credit in 2008. And it's one of those cards that you have to keep paying and paying and paying. And I was like, I closed it, but it didn't do anything because my credit profile is so strong right now. Okay. Or if you can't, another reason why to close a credit card, let's say you fall behind on your credit. It's already been 3 months. You know you're not going to pay for it anymore. Close it. Because at least it doesn't keep racking up, interest and all that. Just close it and deal with it. But close it. Don't just leave it open. Don't wait for them to close it. Just go ahead and close it. So it's really important. But yeah, definitely, I tell everybody the first credit product that you should apply for always should be a credit card. Not a car, not a school loan or anything like that, a credit card. And anytime you have a credit card as well, if you don't use it and it's been, I don't know if it's 3 to 6 months or 6 to 9 months, that credit card can flag you because you haven't had any activity on the credit card. So it's really important that if you do have credit cards, try to put some type of activity every 3 to 6 months. It can be a subscription, it can be a pack of bubble gum, but try to put some type of money on it. The way I do it is like when I have a credit card that I haven't used in a while, and I'm like, you know what, let me rack up some money on this credit card today, because that's going to help you so it doesn't get flagged. And that's how you can get your, you can get lower, they can lower whatever you have, the amount, the credit, they can lower it, because if they see that you're not using it, why do you need such a high credit limit? Or, if you're not using it and you want to go in and get a credit line increase, you're definitely not going to get it. So that's really important for you to know. Okay, so let's go to the next slide. And this one is how to hide utilization. Learn to hide utilization through different methods in order to increase your credit score. Okay, so I'm sure all of us are very good in hiding utilization. So learning to bring your revolving utilization down by hiding it through different accounts is a very useful skill to have. This is possible by using the strategy of paying your credit cards off by the statement date instead of the due date. So we think when we get a credit card and we see the due date, that's when we should pay it off. We should actually pay for it by the statement date. If you pay your credit card by the statement date, let's say you used it, let's say you maxed it out and you pay for it, and you just leave 3 to 4% utilization on there, that's the best way to do it. Okay, it's not by the due date. If you do it by the due date, it's probably not going to report when the next credit card statement comes. It's not going to report that you have 0 utilization or that you only owe 2 to 3%. So paying it off, or transferring it. I'm going to give you a little trick that I did, of course. I have a credit card that I used to pay for the ambassador, which was $15,000, because again, I wanted the Southwest companion pass. So guess what? When I got my credit card statement, I didn't realize how high the interest was. My first payment was like $700 and something. I was like, damn, it's a lot. So what I did is, since I leveraged my mom's credit, I transferred it to one of her 0 interest credit cards. So that's a way to hide utilization. We got to get creative, or we got to transfer it, to the business side, which is also a way to do it. But, once you have high utilization, guys, that's going to kill you. So if you have a 401k or something like that, if you need to use that and leverage it and pay it off, it will be better for you, because I've done this a lot of times. When you if you're able to take a loan from your 401k, if you realize the interest on the 401k is much less that let's say if you have a credit card that's maxed out, or if you have a credit card that's, it was interest-free and it's about to expire, you want to make sure to transfer it. So, those are different methods to use. Also, this is something that I just saw, I ran into it. I have a business Chase credit card, and I have 12 months interest-free. So I owe some money on there. Thank God it's not maxed out or anything. But the promotion ends in September. So the other day I went into my Chase portal, and guess what? They're offering me another Chase business card at 0 interest.
Let's
So
go.
you gotta get creative. I didn't even have to ask anybody. I just found it in my portal. So they're offering me two business Chase credit cards. One, I think I don't know how much money, or I get points. And the other one, I don't know how much cash back I think it is, but it gives me what? 12 months interest free. So now that's a way to transfer my, the money I have on my Chase card, even though it's on my business side and it's not showing the utilization, but it is about to expire in September. So get creative. Sometimes just go into your apps and see if the credit card is offering you something, or if the bank's offering you something, because I just saw this as a surprise, and I didn't even have to go and apply for another card. It's right there, and it says approval guaranteed, not pre-approval, approval guaranteed. So this is definitely a plus. Ready? Is there
Amazing.
anything you wanted to say, JP?
No, you hit the nail on that one. I'm good.
All right, let's go to the next slide. So Chase denials. So like I said, I wanted to talk about everything just a little bit, everything you need to know about handling a denial with Chase Bank. And basically every bank has different denial protocols, but a lot of people have Chase. That's why I wanted, to talk about Chase. When applying for any Chase products, it's important to learn about the Chase denial process and how to manage it. Here are some tips that you can do. If you're not approved instantly and it's been more than 7 to 10 days, you're probably got denied. Okay. If denied, you want to call the reconsideration line as soon as possible and see what happened. Maybe they can overturn it. And also, if you're already a customer of Chase and you have that relationship manager, built, you can go in there and talk to them, and they can probably help you even further, because they can check to see what happened. So those are reasons why you also want to build that relationship with them. Also, this usually works to overturn. So if you denied and you call the reconsideration, it could happen, the decision, but you have to have it within 2 weeks. And this is exactly when I applied for my 2 Chase cards on the business side, because I didn't know any better. The one that I didn't get approved, I did call the reconsideration line, but they had me back and forth, and 2 weeks went by and they said, you got to reapply. So knowing all the information before you apply it's how you're going to get, farther. Also, if after you submitted your application, your screen only says thank you for applying, you'll probably end up getting denied. A denial can also mean you've reached your limit, your credit limit, because you've reached the 524. Try to reallocate some limits. So it depends, because if you're doing on the business side, sometimes I think they have a maximum. D, put it in the chat. Is it 150 on the business side? It doesn't matter how many LLCs.
He says 150. Is
Yeah.
this like I can add to this as well. Is this the amount of credit exposure they're willing to give you? Is that what you're talking about?
I think it is. Yeah, I think it is. So even if you have like 2 different LLCs, even if you have some cards here and some cards here, I think you can only get $150,000. So and then popular, this is what I put here, popular reconsideration lines. So if you guys, watch the replay, or you guys can, take a picture of it. These are the telephone numbers that you want to call. Every time you get denied, I don't care if it's a credit union or a bank, call them. And even if it tells you we can't give you an answer right now, call them. Sometimes it's something so simple that you can fix it. Sometimes it's just a hiccup. Sometimes it's just a letter from, your name or from the address. Sometimes depending how here in Miami, we have a lot of streets. Some people put ST, some people spell it out. So it all depends. So make sure you always call a credit card if you got denied and ask them. Sometimes they tell you got to wait for the letter, but I always like to call. Alrighty, let's go to the next one. How to undo a late payment. The steps that be taken to undo a late payment. And here I didn't finish the PowerPoint, but I'm gonna tell you. So how to do how to undo a late payment. The first thing you should do is always call the bank and see if you can get a goodwill adjustment. Now, if you have 10 late payments, don't think you're gonna call the bank and you're gonna get a goodwill adjustment, because that's not gonna happen. This is if you have one late payment. Sometimes it could have been an auto pay and something happened. Always call the lender first and see if they can help you. Okay, that's the number one thing I would tell you. Also, let's say you have a late payment on a credit card. If you do 11 on-time payments on the same category, it's not that it cancels it out, but it doesn't count as much. So let's say you paid your credit card late today. It's not that you're going to pay your card payment 11 payments on time and that's going to work. No, it has to be in the same category. Once again, if you have 2 or 3 late payments, this is not going to work. This is really for somebody that had a hiccup and, they had 1 late payment. Sometimes, you can do the goodwill adjustment. You can try to write letters. You can try, to dispute, and you still cannot get it off. What do? Just keep making your payments on time. And, it won't count as severe as when it first happened. If you have, let's say you paid a year of good payments on time. Let's just say a year instead of 11 months. But you got to make sure not to have these hiccups all the time. This is just once in a lifetime. So do you think that, paying late because you had the funding company, when you have like 1 late payment, I mean, it does kill you right now, especially, but it's not the end of the world. What can we do?
Yep, exactly.
So, yep, let's go to the next slide. So, general credit repair tips. Undoing a late payment is only one way you can improve your credit score. Here are some other tips that may help you. Pull your official credit report and ask them to mail it to you. So when you pull your credit report, you can get it for free, obviously, at annualcreditreport.com. When you pull it out and you see it in the computer versus when it gets mailed to you, you might see some numbers that you don't see on the computer. So always ask them to mail it to you. That's the best way, because you might see some stuff that you might not see on, when you have it pulled up on the credit. Also, eliminate personal info that has attached to IDs. So you want to make sure when you're checking your credit report that you only have one name, because sometimes when you have several names, what happens is they can be attached to like a number. And let's say in the future, if somebody's trying to sue you or something, those names and attachments, it's easier to find. Plus, when you're trying to get approved for a credit card, that's one way that it could make it jump. You want to make sure to check, and trust me, when you pull your credit report, I think it's with Experience, I just don't have it right now. There's a way where you can see all the names. I have 2,000 names. My name has been, spelled every which way you can imagine. The addresses. There's so many information. The first thing I'm going to tell you is check your credit report. Before going crazy and applying, check your credit report and clean it up. You should have one name, one address, and one employer. Also, let's say that you're trying to get approved for a credit card right now and you just changed your job like a week ago. Don't use that new job. Just put the old employer or put the old address. And as soon as you get approved, all you need to do is call the credit card and say, hey, I just got approved for a credit card. I'm sorry, I put the old address or the old employer. Can I just, fix it right now with you? Because what happens is people that jump from jobs to jobs, or, addresses to addresses, this is one way they can get denied, and it starts looking sloppy because you don't look stable on their credit report. So always go and clean up your credit report before doing anything. Eliminate everything that doesn't belong to you. And sometimes when you're trying to eliminate the personal stuff, they might give you a little bit of a headache, and you might talk to them and say, look, I think my credit report has to do something with a mix and merge account, because sometimes that happens if you have a family member that has a similar name. And anytime you mention mix and merge account, it's like they don't want to get in trouble, so they really pay attention to you. So that's something you can use when you're trying to clean up your credit. You want to identify all your open accounts, because those are the accounts you want to work on. You want to keep paying them on time, and you don't want to touch them. You also want to identify anything negative that you have, like your credit collections or charge-offs. You want to highlight everything, and then you want to start the dispute. Okay, so that's the first thing you want to do. Don't start disputing. First, look at your credit and see what's on there, and then you can start everything else. All right, let's go to the next slide. So bank bonus explanation. I wanted to touch on a little bit of everything. A lot of people don't even think about the bank bonus, bank bonuses, and this is a way to make money, especially if you have young kids in your house and they might not be employed, or they have all the time in the world, or if you yourself want to do it. So what is a bank bonus? A bank bonus is a cash incentive that the bank and the credit unions offer to encourage new customers to open bank accounts. Why do they do this? They do this because a lot of people only have 1 or 2 bank accounts in their life. They're not in the radical marketer, so they don't understand to have different bank accounts and to season them. So this is the way that the bank can encourage you to open, to move your checking account with them. So I'm going to give you an instinct. I opened Wells Fargo because I wanted to, season Wells Fargo, but I also wanted and that time it was $300, but I didn't read the fine print. So after 3 months, guess what happened? I didn't get anything. You have to read the fine prints to the bank bonus explanation, okay? Direct deposit, there's certain amount of monies that must come in to the account via qualification ACH. So a lot of this ACH is when you get paid by payroll, okay? If you're not working as a W-2, you can create it ACH. Must keep a daily balance, sometimes up to 90 days. Possible debt transactions require, you have to use your debit card, you have to have direct deposit. But some people do this, and there's bank bonuses out there for $500. So you got to go in, you got to check, and you got to do your research. But this is the way that people make extra money all the time. Just like, the referrals from the credit cards, they're sleeping on this, and they don't realize that there's a lot of money to be made on bank bonus. So this is just a little tip that I wanted to talk about. Where to find the banks. So you can see it out in the branch, sometimes online, sometimes publicly. You can read about it. Some bonuses are referral only, such as Chase Bank. So some of them, make sure that you check, because some of them, even if you do everything it asks you, if you didn't go in through a referral, somebody referred you, you're not going to get the bank bonus. So you got to do your due diligence. You got to do your homework. Where can I find more information on bank bonuses? Doctor of Credit and everybankbonus.com. So these are 2 websites where you can do your research if you want to get into the bank bonus game, and this really, you're not doing anything illegal, because you're opening the bank account, and especially if you want to build a relationship with this bank. Imagine trying to open a relationship with this bank, and you're getting something extra. And now that we're talking about the banks, I know with Navy Federal, you could fund your bank account, I think, with a credit card for like $250 or something like that. So some bank accounts, some credit unions do let you open your bank account with a credit card. So just do your due diligence and your homework, guys. Let's go to the next slide. And how to hack the algorithm. The easy way to a credit line increase. So anytime that you're gonna go in for funding, you're gonna apply for a credit card or anything like that, 60 days, you wanna start feeding it 60 days prior, okay? You wanna have at least 10 transactions, sometimes even more. It all depends what you're trying to achieve. You wanna make sure that your stuff is on auto pay. For some reason, it does make a difference because the bank sees you like, okay, they're not gonna miss a payment, they're on auto pay. You definitely want to keep your utilization low to 2 to 3%, and you want to have something on it. If you're not using it, you want to have at least 2 subscriptions. You know, you can make Netflix and the gym, but you definitely want to show that you're feeding that credit card before going in and asking for a credit line increase. If you have a $30,000 credit card and you haven't used it in 6 months or 9 months and you go for a credit line increase, you're probably going to get denied, or they're probably going to bring it down. So you want to make sure to feed it 60 days prior, and you want to follow, you know, start using the transactions. You want to pay on time. Obviously, you don't want to miss any payments, and you want to keep it under 2 to 3% utilization. Okay, guys, and put some subscriptions on this. So this is a perfect way when you're going for a credit line increase. All right, let's go to the next one. And this is it. This is the end of the presentation.